most of this real estate that trades hands, it goes from one hand to like a Canadian's hands to another Canadian's hand.
Hey investors, Bradley here from Watson Estates, and today you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Now, beyond just analyzing the market and figuring out what comes next as an investor and a broker for myself and my clients, I want to make sure we're interviewing the best guests, experts in their individual right. And today we have Rizwan Malik, who is our expert on luxury real estate. He's the Senior VP of Sales at Sotheby's International Realty Canada, as well one of the hosts of Season 1 on HGTV Canada's show, Hot Market. He's here today to tell us a little bit about what COVID has meant for the luxury market, and hopefully as investors help you identify what some of the key differences are between the overall market and the luxury market here in the GTA. Enjoy the show. Hi, Rizwan. Thanks for joining us on the show.
Oh, pleasure to be here. Thank you for having me.
I am so excited to have you here. We have the best guests. And so I'm thrilled that you could join us today to dive deeper into the luxury side of Toronto real estate. I mean, I don't know about you, but my understanding is Toronto is the luxury capital of the world. So this is a fantastic conversation, and you're the perfect person to talk to us about it. So before we get started, maybe tell us a little bit about your history. Tell us about where you've come through in the real estate market here in the GTA.
Beautiful. Well, again, thank you so much for having me. It's such a pleasure. And yeah, we're definitely the epicenter for luxury real estate. I've been selling real estate now for about 14 years. I'm currently working at Sotheby's International Realty Canada. And, you know, we are sort of the standard bearers for luxury real estate. And if people perceive that with just value or, you know, a monetary amount on the sale of their home, but I feel like we are the standard bearers for quality of service, for luxury service. But having said that, you know, the Toronto real estate market is very robust, especially in the luxury segments as well. And we've seen that since about 2016, 2017, and it's sort of continued to climb. However, in the last 6 to 8 months, you know, a lot of things have shifted as you can probably attest to as well. You know, COVID, uncharted waters, uncharted territories, things that we're dealing with on a global scale. They're definitely coming in and affecting people even in their individual homes. So it's been quite interesting the last few months.
So tell us, so you briefly touched on there's a difference in the clientele. Maybe for those who aren't searching for luxury real estate, tell us what that looks like. Like what is that buyer, how are they different? How does the quality of service need to be different as they're welcomed into our city or grow within the city?
Well, for me personally, like when it comes to listing a home, I don't necessarily look at it and say, okay, this is a, you know, $600,000 condominium unit or $1 million condo versus this is now a $6.5 million mansion in, you know, Thornhill on a private ravine, that I need to treat them differently. I feel like, you know, quality of service is quality of service. Being dedicated to your client, no matter what price point it is, really, really differentiates who you are as a realtor versus anybody else, right? So I want them to talk about that individual level of service that they've received. So whatever price point they're selling at, not taking high definition photos for granted, not taking the floor plans for granted, not doing the drone imagery for granted, doing a website, blasting it on social media, blasting it on various websites, all of our affiliate websites, not taking those opportunities away just because you're at a lower price point doesn't provide any service to the client. And it's been one of those catch-22s where, you know, it's always, you know, in the back of your mind, there's a double standard, but, you know, you want to be reminded and cognizant of the fact that it may not be monetarily the most expensive listing. It may not be as expensive as some of the multi-million-dollar homes, but to this individual selling, it is their greatest asset. Right. So to them, it is their most important thing that they're selling. So it doesn't matter. They think it's the nicest house on the block. They think it's the nicest condo in the building, even though there's 10 above them and 10 below them that are just identical.
And I think that's a great point. And when people look at Toronto, the outside the city, or even from the US, some of these cities, they look at us and they think that is luxury. The fact that you own a detached home, that's gotta be luxury. So there's, you know what I mean? So as a overall, now within the luxury, there's tiers. And I think that we do ourselves a disservice by saying, like, because even before we started this conversation, we were talking about like over $2 million. People are like, over $2 million, you're in luxury territory. But $2 million is a starting point, and that number goes into the tens of millions of dollars. And even within those categories are differences in the way that the market plays out. And I think that's why I wanted to have you on the show. I wanted to have a conversation about what are some of these differences? How are these markets responding to things like COVID? Maybe that's a good place that we can start. What kind of changes have we seen in that environment?
Yeah, absolutely. And I think when you're in like the ultra high luxury market, I think that is very much, that market is driven strictly by clients who want exactly what they want. So it's not a matter of, okay, how can I make this home fit my lifestyle? It's more like, if I'm going to spend $6, $7, $8, $10 million, this house has to be exactly what I'm looking for. And in often cases, it's about location. So, it's like, okay, we can still renovate the inside. We can still, change the exterior. We can do whatever we want. But if it's not in a particular neighborhood, if it's not in a specific location on a particular street, we're not interested, right? So they'll hold out. They'll hold out as long as they need to. And like a global pandemic, like, COVID-19, that's not really going to affect that market, because they're not necessarily looking at, oh, interest rates are low, so let's just cram into a house for the sake of it. And whether it's the right address, whether it's the right neighborhood, they're not motivated by elements like that. Like, the interest rates are great, but whereas the $2.5, $3 million market, when interest rates drop a percentage, when they drop 20 basis points or 30 basis points or 50 basis points, it's like, okay, we can afford more house. Mm-hmm. So we were looking at a semi-detached or a row house. Maybe we can try to get into a detached. It may not be beautiful, but we can make it beautiful over time. So that is the market that's the driving force behind that. It's sometimes it's like, I go out with clients and they're like, I really, really wanted a garage. And they realize that they can't really get one in their price point. They're willing to just have, a driveway. They're okay to have, a mutual drive and park at the back of the house if they can get their car through these two properties. So, whereas if you're in the ultra luxury, these concessions will not be made. It's more like, this is what I want, and I'm going to hold out until I get it. So, to your point, yes, there has been a slowdown due to COVID. Even though, we've done, over the last 3 to 4 months, I would say it's the busiest I've been all year. And even that, like, it's starting to take a bit of a dip now. Like, it's Halloween this weekend. We're almost into Christmas. We're into like a second sort of semi-lockdown, almost like, in major parts of the province. So, again, people are trying to understand what to expect as they move forward.
And one of the things that I think about when I think of luxury real estate, or really anything over $1 million as it relates to affordability, was back in 2017, this idea that you need 20% down beyond that million. And I know that it created a lot of concern, because all of a sudden you can't afford the house to the same extent. Now, of course, since then we've seen interest rates come down and stress tests and stuff. So all of these things. And I think one of the big questions that I often have in the luxury is luxury a leading indicator, or does it follow in a similar pattern to some of the other housing types? Is it very much seasonal in nature? Is it follow the economy, or is it kind of the starting point? So in other words, if we were to see problems in the luxury market, that could be insight into future problems or not. I guess, how do you find that those two link, if at all?
Yeah, I think, like, seeing cracks in any element or any segment of the market is indicative of the market as a whole, right? If we look at residential real estate versus commercial real estate, that's the first dead giveaway. Commercial will go first, then residential will follow. Having said that, within different elements, like I said, there's something to be said about when it comes to different tiers of luxury real estate. So if we're ultra uber luxury, that doesn't necessarily change. Like, we still see sales at $20 million, at $19 million, at $15 million in the middle of a pandemic. Like, these are individuals who are moving, not necessarily because they're doing it to dump their property, or to capitalize on market uncertainty or whatever it might be, to see where they're headed. These are, again, there are other driving forces, and there are people in the market who are sitting there to wait and say, hey, listen, when that house goes on the market, I'm buying it. I don't care what time, I don't care when it is. It's a cash buy, or the down payment, if you will, or it's so great that it's irrelevant what the rates are. It doesn't even matter, right? So the mortgages on these properties are an option. It's an option to say, hey, listen, our money's doing way more for us somewhere else. So borrowing money from the bank is basically free right now. So we'll take that loan, not because we need it, but because it works and it's to our advantage. So will luxury real estate indicate whether or not the rest of the market's going down? I think these are two completely separate market tiers. And that's why I said earlier, the individuals looking at the $1.5 million, $2 million, $2.5 million price points, this segment of the market is very much driven by little factors like interest rates and what the stress test is like, whether they need 10% over $1 million or whether they need 20% over $1 million. It makes a huge difference, right? Because above that, now let's say your budget goes from $1.5 million to $2 million. Yes, there are other elements. You have to have the additional down payment. You have to have the capital for that. Now your closing costs have also gone up, so you have to have the additional money to close with land transfer taxes and such. Now, again, if you're buying in Toronto, you need to have double that allowance. So, you know, there are much, again, this is very much price driven, but I can tell you the people buying $15, $20 million, they're not losing sleep if they have to pay an extra $200,000 in land transfer taxes. They're okay.
Yeah, gotcha. So I want to talk a little bit about demographics. We'll talk about, I want to get into what makes Toronto, Toronto on a global stage. But before we go there, one of the things that come to mind here is idea of like the Muskoka properties or the cottage country. As people are fleeing, we see these kind of pockets up, these just like sprouting out of nowhere of luxury real estate, or what would seem like out of nowhere. Have you noticed in the luxury space, there's been a movement outwards, or does it seem to maybe just be in these, because of cottage, it just so happens to be cottage? Or is this something that will stretch beyond the walls of places like Toronto, where you can kind of see luxury might start popping up in places like Mississauga, or I don't know, Unit Vaughan, New York, I guess. I mean, you know what I'm saying? Like, do you see that spillover happening? Or is it like, no, if I'm going to get a luxury unit, it's going to be overlooking the greatest city in the world?
Yeah, I mean, to be honest, I mean, again, if you go into luxury real estate, typically these individuals, they have a primary residence, which is either in the city, it could be in Toronto, it could be Mississauga, Oakville, Burlington, or and they'll have a secondary property. You know, like it might be Muskoka, it might be up in Gravenhurst, it might be anywhere else, but it's you know, it's not necessary that they're looking for one home in in the city,
Right.
and that's it. So, you know, I think it's always having that secondary home. So primary residence, where the roots are laid, exactly where they're doing most of their living, most of their, you know, their income comes from somewhere. They're employed, whether or not they're going to the office right now. I mean, it doesn't really matter, but we all have a job which pays for our lifestyles. And, you know, having said that, even though we're all working from home right now, there is an office, or eventually there will be an office that will most likely a lot of us will return to. So having said that, I think there's always a primary residence, which is, you know, closer to downtown, and it can be a city of their choosing. But, you know, these cottages, the other out of town properties become secondary homes. And during this pandemic, I think they've been almost, you know, semi-primary homes, because everyone sort of felt, okay, you know, if I need a laptop to work off of, I can do that up at the cottage. I don't have to be right downtown.
Interesting. So that's interesting. So it sounds as though in a sense, chips will fall where they were already kind of falling. Like they're in the luxury space, we're not so concerned of this pressure of being prices in the 905 being pushed up. It seems as though the lifestyle isn't as impacted, because when we deal with non-luxury, or let's call it below $1 million or below $1.5 million, there
Sure.
very much people are concerned about what city is up and coming, but it sounds as though that's not such a big concern. So question for you. This idea of COVID, you know, you've got closures. What portion, if you were to kind of speculate, of the luxury market is either foreign, or people have come here either through immigration or through foreign investment? And what portion are local residents, before we kind of get into where that's going to go? I'm curious what it has been to date.
Today, oh, absolutely. Like I would say at least 10 to 15% of our luxury market, definitely foreign. And, you know, and more so, I think maybe in around 2016, right before we had the foreign buyers tax, you know, before that was sort of implemented, we had this huge push, you know, like especially from initially what would sort of be in BC, Vancouver. That push went a little, you know, 4 hours east, and we saw a lot of that. But to be honest, I think we've seen that sort of market also cool down considerably. I think now people are typically are primarily moving to Toronto if they are as foreign buyers, especially foreign investors. They're moving here just for like the overall safety of being in this, being in Toronto or being here, right? So I think Toronto is again a very safe city to raise your family in, to live in, and I think a lot of these factors play a key role for individual families when they're deciding where they want to move. Like I have foreign buyers from all over the world that will contact me. Like most recently, I had someone from Lebanon who had emailed me through our Sotheby's webpage and just said, "Hey, listen, I'm looking for a home for my family." And at first, this is quite common. We are a international brokerage. We're in over 63 countries worldwide. Like we have tens of thousands of colleagues worldwide on a global stage. So it's not uncommon to get those emails. And then I started researching the client a little bit more, and I typed his name into Google and everything else, and he's a high-ranking official, and to see that
Wow.
sort of stuff, it was quite astonishing, because like you have to understand, it's one thing to say, hey, listen, it's not safe for the average individual overseas, but like if you're a high-ranking official, like you would think you would have that security detail, or you'd have access to people that could make you feel safer, and yet you still want to find that safety, and whether that's in a city like Toronto or somewhere else, it speaks volumes to what our city's like, and what drives people to move. It's not just always, we're gonna have a great big house in Toronto. It's more like, okay, we're gonna have a safe environment to raise our children in. Wow. So that it's very different.
Yeah, that's an incredible story. Thanks for sharing that one. And so, we just saw a report, we were talking about it on our show, where the immigration levels are expected to be 60% of last year. So do you see this having any short-term impact on the luxury market? Do you see, if so, or if not, do you see long-term this having an impact? How is that all going to kind of play out given these things that you're saying and the perception of Toronto on the global stage?
Yeah, I think with luxury real estate as a whole, I think a lot of that trading that happens, it's local. It's locally for the most part, right? Like these foreign stats, they exist. There are foreign buyers, absolutely. There are people who buy from overseas, but most of this real estate that trades hands, it goes from one hand to like a Canadian's hands to another Canadian's hands. It's not necessarily always a foreign buyer. So for that regard, like even if immigration is lower, I think what those immigration numbers will affect will be more the entry-level product. I think it'll affect the rental market. We've already seen incredible drops in the rental market to begin with over 8,000 or 9,000 Airbnb units hitting the market that were being rented out on a daily basis to now going to a traditional one-year format. I have clients and I have friends who are renting, right? And they can go back and rent their exact same unit for 20 to 30% less than what they're paying. So as funny enough, a friend of mine contacted me this morning and said, "Hey, look, this unit that I was renting in my building is about $500 less per month."
Yeah.
So I said, you know what? Take a screenshot of the listing, send it to your landlord, and say, "Hey, listen, I'm month to month. I'm month to month. Either I leave in 6 months and this is your reality, you're gonna have to face this, or you just adjust it and we just continue on that way," right? Like it's just all about a conversation. Like this is what the market is today, and I think how the real estate market has been appreciating exponentially in the last very, very long time, the last several years. The rental market has also gone out of control. Like it was, to see multiple offers on a rental, like it was just pretty incredible to now say, okay, listen, you've listed your one-bedroom condo for $2,300 and $2,400, but I'll give you $2,600 a month to let me live there. Mm-hmm. It was just for I guess the average renter, like that's pretty much a paycheck or a bi-weekly paycheck, right? So, and how do you sustain that? How do you live on what you have left over? So I think this is a pretty good change.
Yeah. For the renters, absolutely. Now, So maybe put it into context for us here. We've seen a lot of stats, and often the stats, those skewed, especially when we get luxury properties doing really well, which is kind of the scenario now. The numbers
Yeah.
kind of get pulled up a little bit. But let's just look specifically at the luxury market. Now, I know luxury real estate, the reports often will come a little bit behind. They don't come out necessarily exact same time. I'm curious, specifically in that market, what have been the price changes? Are they going up? Are they flat? Are they doing down? Maybe in that lower luxury segment, they're going down, but on the upper, they're going up. Like, how does that fall? Where do those fall as far as the last year or so?
Yeah, honestly, absolutely. I would say it's quite the opposite. So like with the lower tier of the luxury market, like let's just say the $2.5, $3 million segment, that's actually going up considerably more than the higher end stuff. And again, within the higher end stuff, the issue that you have with luxury real estate, the issue that you have with some of this, the movement of some of these homes, is that there's no relevant comp, right? Like if you're in a condominium building, and let's say you've got that same unit, there's 5 above you or 5 below you, it's relatively easy to derive at a price and say, okay, on the 3rd floor it sold for this, so therefore on the 5th floor it'll sell for this. It's a year later, so let's just increase it by this much, and we've arrived at our price. You know, you go to some of these big luxury, ultra luxury homes, like 20, 25, 30 million dollars. All you can say is, okay, great, so it's on a 2-acre lot, and so is this. This has gates. So does this. This is the square footage. But then it needs to stop, because each home is so individual. Each home is so different. You know, you've got exclusive, rare, ultra luxurious materials that have been put into one home versus another. And you know, again, like, so that's where you get a bit of a disconnect as to where that value is, right? So again, and sometimes this is the catch-22. It's very difficult to price some of these homes because you've got a seller who is extremely involved with this process, and rightfully so. But there's no real comp to go off of. You have a general idea, and you come up with a price that you feel like, okay, this is going to appease my sellers, but also not make me look like I'm completely out to lunch to my colleagues in the marketplace. And you kind of hold your breath for the first week, and you see what the reaction is like. Mm-hmm. And you know, and sometimes it's great, and sometimes you get showings booked and you get some real feedback, and sometimes it's really bad when people don't even book a showing to come, and then you have to have that difficult conversation and say, hey, listen, maybe we didn't price it all right. So you know, I think that also skews the market, right? So you have to understand, when it gets to that ultra uber high end luxury, you need to be able to price it correctly. And you know, it's one thing to say the sellers are extremely intelligent, the agents are extremely, they have a great grasp on the market, but the buyers are just as intelligent, right? No one buying a 5 or a 10 or $15 million home is just going to throw that money away and say, you know what, I will take you at sticker value. I'll take you. I'll take you, and I will hand you a big certified check for that. You know, they're just as in tune where the market is, you know, and I'm sure you experience this too. Like, you know, I'm sure you go to listing presentations, and sometimes it's like the sellers are asking you questions because, and when they know the answer already, right? Because they know what their neighbor sold for. They know what the neighbor 4 streets over, 10 blocks over sold for, but they just want to make sure that you know, and they want to make sure that you've seen the comp and that you've done your homework. Right? So I think buyers and sellers today, maybe 10 years ago, 3 years ago, even 5 years ago, they weren't in tune with, or weren't as in tune with the market. But today, with certain websites, with sold comps, with real estate values, appraisals, everything available online at their disposal, whether or not they have, you know, a daily email kicked in or not, buyers and sellers are so in tune with where the value is, right? So I think, as much as I'd like to say, oh yeah, you know, the lower end market or the lower end tier of the luxury market is suffering more than the higher end, it's not the case at all. The lower end is actually, again, it's even higher because you've got sort of fresh blood, so to speak, right? You've got new buyers. You've got a whole new buyer pool that's now entered the market because of our interest rates, because money is so cheap to borrow, because the affordability and the buying power has increased so much.
Yeah,
So
and that's
you brought these new bodies in. Sorry.
No, that's a perfect segue to what I was going to ask you as well. So given all of these things, obviously most of our listeners are not in this luxury category. What are some things for the middle class to take from? Like, given all of these trends that are happening, what would you say to someone in that category, in that camp, looking, maybe they're competing or they're finding an extended competition is entering the market? What are some advice, just having seen the full picture, seeing the top, seeing the bottom? What are some things that they should keep in mind? Maybe encouragement or maybe some risks that you see coming down the line?
So one of the biggest things I will say, just because it's affordable or just because the market has opened up to a segment where you feel like, okay, we're afforded more money, we can get more money from the bank, don't take it just because of that. Yeah. Because, where the rates are today, it's not sustainable.
Right.
Rates are going to go up. So, you don't want to be in a position where once they do go up, that you're up for your renewal and you can't afford your home, right? Like that would be the worst thing. Now play it within reason. Let's say if you're looking for $1 million home, if you're looking for a $1.2, $1.5 million home, and you weren't able to find that ideal property, and you now need to invest an extra 50 or 100,000 or 200,000, that's okay. But don't buy a $2.5 million home. Don't increase your budget by $1 million just because the bank will say, okay, you know what? Based on current rates and the stress test and everything else, we're able to give that to you. Don't take the money just because it's offered, because eventually you'll get to a point where it's not going to be comfortable. It's going to be a difficult pill to swallow down the road.
And almost difficult to believe when you hear the interest rates aren't moving for 3 years, but very wise beyond your years, my friend. And I'm so glad you could join us on the show. Maybe if our audience have any questions for you, whether it's luxury or otherwise, I mean, you're heavily involved in our city. If they want to reach out to you, how are they best to find you?
They can find me through Sotheby's. So Sotheby's International Realty Canada. They can look up Rizwan Malik. They can shoot me a message on Instagram. It's just my name, @Rizwan Malik, and I'm happy to help them.
Wonderful. Thanks again, Rizwan, for joining us on the show today.
Thank you so much for having me.